Welcome to Buying America, and today we're gonna discuss something that I myself find really interesting, and I wanna make the difference between investing and speculation.
I was going to say, I still don't know what we're going to be talking about here.
Yeah, exactly. I mean, he just decide what
Now
he
you know,
wants to record.
I want to bring it fresh because, nowadays in social media, how many times do we hear invest, invest, invest? And I don't think the message is wrong. I'm just pretty sure people refer as investing to many things that are not investing. I myself don't think that buying a shitcoin thinking that, oh, it might pump is investing. So I think investing gets confused with speculation or with
a loan.
With gambling. So let's try to make the difference. So I want to ask you, Joe, what is investing and especially what is not investing?
It's a good question. Very good question.
I'm going to say one. Think about it, but I'm just thinking.
There's a lot to say.
Yeah, but
sure.
I'm just going to think I'm always bringing the Latin American way, okay? So a lot of people think that when they give you, I don't know, $10,000, they immediately said, when or how do I get my money back? So wait a second, this is not a loan. It's an investment, right? So I'm not going to give you your money back like that, or you're not going to have it available like as in the bank. If you want to have it liquid, okay, put it in the bank, but the returns are going to be very slow. I mean, very, very low, right? So a lot of people think like investment is like a loan, but it's not. I think that's a big difference. So like when you're opening a business, oh, we're going to open this business, and people think, okay, when do I get my money back? No, you're opening a business. The money is going to be in the business that is going to generate money. Okay, if you want to call it, when do I get 100% of my returns is different. But an investment or a business needs the investment continuously. It's not like you're going to put it one time, you take it out, and you keep having the business. How? Well, I think that's a big confusion on that.
I think what you're speaking to is people not being able to decipher between being an equity partner or just providing debt.
Mm-hmm.
So sometimes when you're investing and you come in and you're raising equity. So an investor will come in and they're an equity partner. Whereas sometimes you're coming in and all you're doing is you're providing debt. And in that case, that's a loan. So there is a difference. And if someone's coming in as an equity partner and they're not just providing debt, then you're right. The question really shouldn't be, well, when am I getting paid back? You're an equity partner. You're involved in this thing. What you want to have happen is make sure that this thing continues to grow and that it produces a residual, and you get to participate in the equity and growth of an asset. So it shouldn't be, when am I getting my money back? It should be, the question really should be, what do I need to do or understand to make sure that the equity continues to increase in this asset? If you're someone just participating in debt, then yes, that's when you're entitled to ask the question of like, what are the terms? When would I get paid back? What's my fixed rate of return? So there's different forms of investing as well. But I would say, because you pose a really good question, and I think in today's day and age, there's so much like stuff on social media. I would start off by saying that there's a danger in being confused about the subject matter for sure, because then you don't do anything. And in my opinion, I think saving is so much more dangerous than investing. Let's take a look at what the dollar allowed you to buy 5 years ago, what it allowed you to buy 10 years ago, what it allowed you to buy 15, 20 years ago. What was there more speculation, or was there more risk rather in saving or was there more risk in investing? And in my opinion, I get nervous. If I have, a substantial amount of money just sitting in an account and I'm not doing anything with it, it actually makes me nervous because I understand that in economies of scale and in inflation, my money's getting eaten away. My purchasing power is getting destroyed. So there's a lot of people out there because they've gotten burnt in investing thinking that saving is the solution, but saving is not the solution. Saving is probably, in the grand scheme of things, for all the frauds that you hear, unfortunately, I would say that saving has probably ruined more people than investing. And I know that's a bold statement to make, but there are people that never bought a house 15, 20, 25 years ago. They just saved and now they're completely priced out of the market. So you're destroying your purchasing power when you're saving. Now, does that mean that you just go into the market and you blindly invest and speculate? No, I think the misconception is that you rely on someone to just make the investment and you become ignorant or oblivious as to what's being done. Case in point, I was on a radio show in Vancouver long time ago with a panel of advisors, and people called in and were asking the question of what would you invest in? How would you invest? And the question was, what's your definition of diversification? They went around the panel and the financial advisors pretty much all had the same common theme, which is my definition of diversification is I'm going to invest in mutual funds, stocks, equities, derivatives, bonds, gold, all kinds of different things. And then they came to me and they're like, so, do you concur with their definition of diversification? I said, absolutely not. And they were kind of stunned. And they're like, well, what do you mean? I'm like, because there's no way, respectfully, guys, I know you're financial advisors. There is no way that you're an expert in all these different asset classes. There is just no way. My definition of diversification, because I chose real estate, I became an expert in real estate. My definition of diversification was I'm going to become an expert and understand a specific asset class, and then I'm going to diversify in different economies of scale. So I own property in British Columbia. I own property in Ontario, Canada, property in Florida, New York, Nevada. They're all very different economies. So what was happening in New York State, not the same effects were happening in Florida. What was happening in Toronto, Ontario was very different than what was happening in Nevada. So I really wasn't at the mercy of the micro economies of these different places. So I took one asset class, I became an expert, and I diversified in different economies of scale. So what does that have to do with investing and speculating? I wasn't going to speculate. And I still say to this day that if one is working with an advisor, and I'm not here to knock down advisors, but I think what people should have the ability to do is understand what their advisor is doing for them on their behalf, and not just say, here's my pile of cash and just keep me posted on how my investments are going. That's speculating.
And also very important to understand what their incentives are, right?
Oh, no question. No question. So whether it's you that's doing the direct investment or you're having someone do it on your behalf, the way to eliminate the speculation is to eliminate the confusion. The way to eliminate the confusion is to confront it and to understand what it is that you're investing in. There has to be some kind of knowledge and education. You just can't be blind to it.
And when you talked about advisors, I remember this famous quote. I don't know if I'm quoting it correctly, but they say it's hard to make someone understand something when their salaries depend on them not understanding that thing. And in this context, is because some of these asset classes are on the I don't want to say they've been criticized, but they've been questioned because they're not keeping up at the pace of inflation. You know, like if you compare all these very conservative mutual funds that give returns under 5% annually, well, compare that to purchasing power, and you're just losing money. Probably slower, but you're just losing it, you know?
Yeah, no question. And I know what I said is controversial because a lot of people are like, how could you say that saving is much more dangerous? Well, I mean, it ultimately
people
it is.
Can go and Google money supply. They can just Google monetary supply in the last 2 decades, and they will.
I was just having that conversation with my team in one of my companies last week, actually. The number one service, like the service that everybody gets in that business, 23 years ago that we opened, we set up a pricing for $125, okay? $125 for this particular service, okay? Nowadays, the cheapest starts at $350.
Yeah. So you tell me what's worse, right? Saving or investing?
3 times. Sometimes 5 times more, because now the range is between $350 to $750 on that service, when we used to charge $125 23 years ago for all of the different options. It's crazy. So it's between 3 to 5 times more expensive 23 years later.
Yeah, your purchasing power is completely eroded. But for the people that are listening to this, let's make clear, I'm not suggesting that saving is more dangerous when you're just speculating and saying, I'm going to throw 100,000 into this cryptocurrency and I'm going to put 100,000 there and be completely ignorant to what you're investing. That's dangerous. But saving is more dangerous when you are an educated investor and you know what you're investing in and you're educated in that and you have an idea on what it is that you're doing. Then saving is more dangerous. But, let's not...
I was going to say something. I have a friend that won the lottery. His dad won the lottery, not like the jackpot, but a very good amount, 30 years ago. And he just put it in the bank. Nowadays, it is worth nothing.
I made this comment one time at a presentation that I gave a long time ago, and people were looking at me like, really, you believe in what you just said? And I said 100%. And that is this. If you actually took the world's wealth and you distributed it equally amongst every single human being on this planet, it would only be a matter of time before the rich got rich again and the poor were back to poor status.
It is controversial because that depends on who owns, and I'm going to connect this to the point, that depends on who owns the productive assets, So it depends on what decisions you take. And under that matter, is like whatever is going to protect you nowadays is just owning productive assets, because the money, I think this idea of explaining to people how the monetary supply is killing their purchasing power is so hard for people to confront that, because for the first 20 years of your life, they told you save. And there's some people that even say the base of the rich is to save. That's a phrase that is being repeated in Mexico nowadays. So I think it literally attacks the first years of your learning to tell you oh no, your imaginary number, every day is just moving what it can get you.
But ask yourself this question: the rich or the wealthy that are saying save, how did they get to that place to begin with? Did they get rich because they saved?
No.
Whether they built it through a business or whether they accumulated assets, somehow, some way they got to that status.
Yeah.
Right? And if it was via a business, well, they invested in their business.
Yeah. They weren't saving. The productive assets.
Exactly. So to say, I personally have never met anyone who saved their way to wealth.
No.
That's almost like an oxymoron. That doesn't even that doesn't make sense. I've never met anyone that saved their way to wealth. Now, have I met people that are like, all right, I'm going to like hold on to this cash because I'm preparing for, there's an element of speculation, but they're preparing for maybe assets to like go down or something happening in the market or the economy. Sure, they're trying to like, predict. That's not my method of investing. But those are the same people that would tell you they're not lifelong savers. That's not how they got there. And that's not how they're going to continue to get to where they want to get.
They're just getting ready for a big opportunity or something they're expecting, Yeah. And I was just thinking about what you said about diversification, and I'm going to maybe change the subject a little bit, but I think it's part of what you were saying. Real estate. I always said that it became sexy to invest on real estate, to buy houses, to flip it, to rent them, to do Airbnbs, whatever. And especially a lot of people from other countries are coming to the US and they're coming for specific markets. I was just checking, I follow several accounts of people just showing statistics about many different industries, in particular real estate. What state do you think are the three that are losing more value on homes right now in the States? 3 states.
If I had to guess, and I actually don't know what the stats are, but I would have to guess Florida, Texas, Nevada.
What do you think?
I was going to say Florida, Texas, California.
No, it's Florida and Texas and Arizona. Okay.
I was a toss-up.
What do they have in common?
Oh, they are so attractive for Latin America. They are easy markets to reach, and they're being offered like it would be for us so easy to make a study of how many companies are offering, at least in Mexico, that is the market that we know, buy a rental property in Florida, Orlando, near to Disney, and
same thing in South America.
They sell you like blah blah blah, like they talk to you about a rental apartment in Florida, but they're showing you pictures of Mickey Mouse in a park, like and that's how they.
Well, I have friends and family that have bought things in Orlando and Miami, and every time I listen to them, I don't know, please no.
I mean, they're doing it. But I'm gonna tell you guys this, and I know this sounds controversial as well, right? For as much as maybe those markets might be a little bit, inflated, I would still say for someone who removes the speculation, because they remove the confusion, they know how to analyze and assess a deal, I can still find deals and opportunities. Why? Because I know what to look for.
Yeah.
It's when you're uneducated and you're just getting caught up in the hype. Like you said, someone's being pitched with Mickey Mouse in the picture, and they're like, sure, place my money there.
That's the thing. They're not picking the right value,
And when you talk about how to analyze a deal, in other words or in other terms, you're talking about entry price, which is important. At least on our Victory Capital Fund, we insist a lot on the importance of finding off-market deals, so entry price is not killing you. And Howard Marks, a great asset manager, would say, there's not an asset that is bad enough to not give you returns if you buy cheap enough. And there is not an asset that is good enough if you buy it really expensive. I mean, he would say it with another words, but
I totally agree with that.
Really insistent on entry price on any asset class you go, specifically on those that are liquid and you can track prices. Like real estate fits into that category. So
yeah, we've closed on approximately $6 million worth, right, in real estate parks over the past month and a half. Okay, none of those deals involved speculation. It wasn't, hey, let's do this and hope that this thing is going to work, right? That's the
and hope that the market pumps.
The speculation comes from the hype and the noise and people saying this is good to do. Whereas really what it should come to is don't get emotionally attached to what's being said. Get emotionally attached to what the numbers look like on paper. So I don't speculate when I'm buying something and anticipate or hope that it's going to go up in a year or 2 years. My investments, I will assess my cash flow, my ROI. I will look at what the numbers look like today in present time. And if those numbers like make sense with a nice healthy cushion and return, then great. I've eliminated the speculation. I'm going to move forward on it. But if, and this happened when the markets crashed in 2008, 2009 in the US, I had a lot of people come to me and they were backwards. They bought pre-construction, they were negative cash flow, but they were hoping that in 6 months they could sell it and make like 20,000. And they came to me and said, so Joe, how do I get out of this situation? And my response to them was, well, when you first bought it, did you analyze to make sure that it made sense? And they're like, no. So you were okay with this losing money from day one. You saw it. It was very clear. And you did it. Why? And again, they were speculating, hoping that in 6 months they could, because that's what was happening with the markets. And my response to them is anytime you see, especially in real estate, where you have double-digit returns in less than a few months, it's a fictitious market. At the time, you were seeing 25%, 30% growth in less than a year. That's not sustainable. It's a fictitious market, and people are getting caught up in the hype. So what I'm saying is, look at the numbers. Have it make sense. There's so many ways to remove the speculation. You don't have to get burned.
And hope is never a strategy.
Hope is not a strategy.
No, it's
Crossing
like
your fingers is
it's
not
like
a
going to the
strategy.
casino and let's put this on the whatever.
I mean, you may as well. You know, you may as well put it on black, put it on red, and see what happens.
Yeah. So, what are the best states for real estate right now on single homes?
So the best states
Family homes.
in real estate right now
What
are the,
state do you think?
are the states that most people wouldn't even imagine.
Mm-hmm.
States that aren't necessarily talked about.
What state do you think?
I don't even think I can name them. I don't know the 50 states. Yeah, but it should be something that...
I just wanted to mention it, speaking about diversification and real investment and really investing and not speculating. So the best states right now are in the northeast. New York, New Jersey, Vermont, New Hampshire, Connecticut, Illinois. I mean, states...
And I just happen to have an office. Brokerage
Exactly.
in one of those states and in one of those areas where it's kind of a tiny hidden little gem where there wasn't speculation and property values didn't do this, they didn't do that, they just did this, nice and steady. And that's what I was looking for. No hype, not trying to hit a gold mine in a short period of time, just nice, steady, real growth.
There was this broker that I once emailed with that he said, he made like the joke where he said the best businesses won't be on a one-way, like on a like direct flight from Mexico. You know what he means? Like, well, what cities have direct flights? Los Angeles, Dallas, Miami, Florida, like all the big cities. He was explaining like, if you want to go to New Hampshire, I'm pretty sure any city in Mexico has
have to connect.
Yeah, you might have to connect. Yeah, that's what he meant, and it makes sense. Like,
Listen, there's no coincidence that what wasn't deemed sexy when we were growing up, and still not necessarily sexy, but the numbers are plumbing companies, electrical companies, AC companies, and it's very similar in real estate. It doesn't have to be downtown Los Angeles. It doesn't have to be Miami.
Oh.
There are a lot of smaller town USAs where if you look at the cash flow and the numbers, it's unbelievable. But people turn a blind eye to that.
On any industry, my best customers in products, you cannot even fly to the city where they are. There's no airport. You gotta drive.
I told you, you gotta take connections.
Connecting flights, man.
That is not even a connecting flight.
I think
It's a connecting drive.
That's what we get out of this podcast. Anyone who wants to invest, you gotta go through a connecting city.
Exactly. So that's what we're doing.
That's the first
And
clue.
we are connecting them to the right investments.
And we are connecting them.
Yeah.
No one-way flights to no direct flights to Tampa from any city in
There you
Mexico.
go.
So there you go.
That's why in America, investing right. Not and we don't speculate.
We will keep buying
We're
America.
moving to speculation.
Yes.
Thank you, Joe.